Why you're the last one to get paid. End of the month, everyone else got paid. The techs got paid, the suppliers got paid, the landlord, the power bill, maybe the tax office, they all got paid. Probably everyone except you. And if that's been the story for years, then I need you to hear this next part. Most owners think the answer is to make more money, book in more cars, work more hours, generate another big month or the biggest month you've ever had, and then finally hope there'll be something left over for you. So they push harder and they're still left sitting last in the queue, waiting for the money to land in their back pocket. See, here's what's actually going on. This isn't a money problem. You're making money, right? It's an order problem. You're paying yourself last, so you end up getting paid last, if at all. You're running a formula that's actually rigged against you, but there's a way to flip it, and that's what I'm going to show you today. And once you see it, you wonder how you ever ran the shop the other way around. Now, in a minute, I'm going to show you the flip, the one change to the order that you pay things that actually puts you first instead of last. But before we get into that, we've got a free guide, Financial Mastery for Auto Repair Shop Owners. It walks you through the financial fundamentals nobody ever sat you down and taught, the exact stuff that today's episode is built on. The link is in the description box below. You can go and grab it at the end of today's episode. Now, let me show you the formula that you're running right now. You're running this formula, right? Sales minus expenses equals profit. You bring the money in through the work that you do, dollars come in, right? Some money goes out because, well, you got to pay for the stuff to get the job done, right? And whatever's left at the end, if you're lucky, is profit. And if we're all honest, that really gets squeezed into not very much, right? It sounds about right, doesn't it? It's how every one of us was taught to think about profit, given that it is a generally accepted accounting principle. But, I mean, in the formula, it's pretty obvious that profit is an afterthought, right? Look where it sits, right? It sits right at the end here. It's the last thing that an owner thinks about. Ultimately, it's a leftover. And a leftover is just whatever the business hasn't already eaten. And an auto repair business is a hungry thing, meaning it will eat, consume, or gobble up whatever amount of money you put in front of it. And the problem is that the business never gets full. So same as the theory that work expands to fill your day, well, your spending expands to meet what's in the account. Give your business more money to run off and it will eat more money, right? And if you're like most auto repair shop owners, there's always one more tool, one more subscription, or one more thing that the shop needs. So what's left over is almost always nothing. But let's flip the script and let's forget that formula. Let's change it to this. Sales minus profit equals expenses. Yeah, let's actually take profit out first. There's a novel idea, right? Take your profit off the top first. Your pay and your tax off the top first. Then the business runs on what's left, right? It's the same money coming in, right? You still got the same dollars coming in, but you're actually taking your profit out first. It's the first thought, not the last thought. Same money coming in, but a completely different order. And watch what that does, right? When you take it off the top, okay, you got money coming in and you take profit out immediately, right? The business gets served a smaller amount of money, right? You're piling less cash onto a smaller plate. And ironically, what happens, and we've seen this time and time and time again, is that your business adapts to the new amount of money, right? It learns to run itself off a smaller serving of cash. So you're not hoping for leftovers anymore as the owner. You're telling the business how much money it gets to run on, and you're letting it work the rest out. And that's the whole shift, right? Profit stops being an accident at the end of your week, your month, or your quarter, and it becomes a decision that you make at the start of every job, every day, or at the very least, once a week, when you go and allocate the money in the way that I'm about to show you, right? So that's the flip. We stop using the formula of sales minus expenses equals our profit, and we start using sales minus profit equals expenses. We take profit out first because the whole goal of running a business is to make a profit. So we remove profit first and we say to the business, this is how much you've got left to run on. Super important. But how much do you take off the top, right? That's the really great question. So I want to give you the way I think about profit first. And I think about it as a personal trainer for your business, right? I'm going to run through all of this in a second. I think of it as a personal trainer for your business, right? Think about what a good trainer does the first time you walk into a gym. You're thinking about, okay, maybe you've got a bit fat, a bit heavy, a bit sluggish, you're a bit out of shape. You decide you're going to go see a personal trainer. Well, when you walk into the gym for the first time, they won't just throw you on the treadmill straight away, right? They're going to ask you a bunch of questions. They're going to do some assessments of where you are right now against where you want to get to. So current fitness level versus intended fitness level, right? And that'll be a mix of areas of the body that you want to develop. And no doubt it'll have some number attached to what the scale shows when you step on it now and what you'd like the scale to show when you step on it in 6 weeks, 12 weeks, 26 weeks, 52 weeks, however long it is, right? And from that, your personal trainer will build you a plan, right? A training program to help you put muscle on, and a nutrition plan to help trim the fat without cutting the muscle. The end result is that you will be the leanest, strongest, healthiest version of you. And Profit First does that exactly for your shop. Let me show you how, right? Because Profit First trains your business to become the leanest, strongest, healthiest financial operation it possibly can, because it looks at where every single dollar is going today, then builds a plan relative to your business's revenue level to work the muscle, which is your profit and your pay, with, well, working the muscle and trimming the fat, right? Being the expenses that that you have inside your workshop. Now, what does Profit First train off? Like what number does this system that I'm about to work you through train off? Well, it's not your big turnover, because you don't get to keep all of the money that comes in from the jobs that you do. And in last episode, I think it was episode 22, we measured your gross profit, right? That's the money you actually keep. But profit first works off a number just above it. We call it your real revenue. All right, I'll explain that to you now. Now, real revenue, or rather, real revenue, let me first say this. Right. Real revenue is the money you make from the jobs you do minus what you spend on parts, materials, and any subcontractor costs to get that work done. Okay? So it's like this. Revenue is what you made from the work you did. Okay? It's made as your sales. It also involves any loans that you might have got for the business. Overdrafts is one. Or any other income that you generated for the business. It could be money that you injected back in as the owner. It could be that your mum or dad gave you some cash, or maybe there's some benefits you receive from the government for training, for your apprenticeships that gets included, right? But revenue is any money that was paid to you for the work you did. It's the money that you made. Minus COGS, cost of goods sold, what you spent to get those jobs done. So it's what you spent on parts, what you spent on materials, and what you spent on any subcontractors. So did you have to pay other people to do parts of the job, and those people are not permanent or part-time employees of you, right? So revenue minus your COGS. So what you made minus what you spent is your real revenue figure. And that's what you've got left, the actual money you have left to run your business, pay tax, pay yourself, and keep some set aside as profit, right? And real revenue, that's the true money your business has to work with. It's not the vanity number that you say at the barbecue when you want to pump up your own tires and sound a little bit flashy or fancy to your mates. I worked with, back when I was doing my own thing many, many years ago, before I joined, teamed up with Rach here in the Workshop Whisperer. I was working with a meat processing company, and I was running Profit First with them. They were a 25 million revenue business, but they had $20 million worth of materials in the form of livestock and subcontractors. So they did 25 million in revenue, but it was a $5 million business when we stripped out parts, materials, subcontractor costs. That changed the way the owners viewed their business. It's exactly the same way I want to help you change the way you view your auto repair business, right? And out of this real revenue, right, before the business spends a cent, that money gets divided up. Well, first off, your GST. Depending on where you're watching this video from, it's probably going to be somewhere between 10 to 15%, right? So before anything else happens with that real revenue, 10 to 15% comes out as your goods and services tax, or whatever the label is in the country that you're operating in right now. Okay? Then we divide it across 4 buckets, 4 accounts, being your profit, your owner's pay, your tax, and your operating expenses. Right? And that's important because It means the money is already where it needs to be before you ever get the chance to spend it. And here's where it goes, and this is what it's for. So from real revenue, okay, from real revenue, let me mag that up first. Oh, this is proving harder. There we go. Real revenue. You see the arrow, 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 arrow. First arrow is into profit. We deduct a certain percentage of your real revenue and put it into a profit account. What are we using that profit account for? Well, it's used to pay down debt. It's used to build up for in case of emergency. We call it a war chest. And profit is also used to reward yourself every quarter for the risk you take in running your own business. And there's a formula that we apply through the Profit First method to work out how much money from your profit account do we direct towards debt and or your reward. The second allocation is to your owner's pay. And owner's pay covers your wages as the business owner. And if you've got any other owners, it covers their wages. It covers any drawings you might take directly from the business. It covers any dividends you might pay yourself and any other shareholders across a week or a quarter. Another one I didn't put on here as well. It also covers the super contributions for you as the owner or super contributions for any other owners. Then we've got tax. The tax account covers your PAYG or PAYE installments or amounts. It covers your company tax and it covers any tax that you may need to pay on the trust structure or trust accounts that you've got set up to operate your business or to manage the distributions that you make to yourself and the owners through your trust structure. That's what we use tax for. And then finally, we've got the OPEX account, operating expenses, which is used to pay your suppliers, pay your team, pay your utilities, and pay your bills. Right? That's how it all works together. Every account has a clear purpose, and any dollar can only ever sit in one account and be used for one thing. Now, there's a benchmark for every single one of these accounts: your profit, your owner's pay, your tax, your OPEX. Okay. And essentially, the benchmark tells you and tells us what a healthy shop, what a profitable auto repair shop should be allocating to each one of those accounts, each one of those buckets from its real revenue. Okay. Finding where your percentage sits, where your benchmark sits today, and building the plan that walks you from where your business currently is to where we would want it to be over 18 months. That's the Profit First assessment, and it's the Profit First rollout plan that we design. And that's the work that we do with every new engine room member. Now, I'm not going to put the percentages up on here and tell you what they are, because the number that's right for you, the percentage that we design for you, well, that number depends on your current financial position. Right, so it's custom built, it's bespoke, it's designed based off of the financial analysis we do for your business at the time that we do it, and we build the plan specifically for you at that time. But here's why running Profit First, essentially having a financial personal trainer in your business, here's why it's worth it to run this kind of system, because it's not theory. Regan, a client of ours from Perth, paid off nearly $400,000 of debt using this system. He didn't do it by working harder. He didn't do it by hiring more techs. He didn't even do it by working longer hours. In fact, he's about to reduce his hours. But he did it by changing the order that he paid things in. Sarah, a client of ours from New South Wales, finally had money set aside, sitting there ready in a separate account, ready for when the bills came in at the end of every month. Wasn't scrambling around wondering how she was going to pay the bills. She had money set aside ready for those bills to pay. And Tanya and Godfrey, another clients of ours from WA, they used this method to help consolidate their debts and get on the front foot for the first time in years. These are the same kind of auto repair shops that you run. In many cases, they're generating the same kind of revenue that you do, but they simply implemented a system that meant they stopped paying themselves last, and you should too. So now you've got the flip, right? Sales minus profit equals expenses. We take profit out first. And the personal trainer, right? An actual banking structure, a cash flow management model that means your business becomes profitable and stays profitable forever, right? Now, stay with me because in a second, I'm going to give you 3 questions that you can ask yourself this week. But if today's episode, lifting the lid on your numbers that you've never been shown and understanding how to create cash flow or how to manage your cash flow in a way that means you'll stay profitable, then that's exactly what that free guide I was talking about, Financial Mastery for Auto Repair Shop Owners, is for. It's the plain English foundation, like what to track, what your numbers mean, and how to read the story that your financial reports are telling you about your shop. So a system like this has something really solid to sit on. It's free. If you want, just pause the video now, open the description box below, hit the link, grab the guide, then come back and finish this episode with me. Okay. Now, here's the anchor. Profit isn't what's left after you've paid everyone else, right? It's the first thing you pay yourself. After sales, you take out profit, right? Or in this way, look at what you got left after you've paid for what you did, after you've paid for the jobs, your cogs, your parts, material, subcontractors. And the first thing, your first allocation is to your profit account, right? It's the first thing you pay yourself. Sit with that for a second. It's probably not what you're doing right now. Now, these are the 3 questions to run over your shop this week. First one, last month, who actually got paid first? And where in that line were you? Be totally honest. For most owners, the answer is almost always, I got paid dead last again. Question 2, when your tax bill lands, right? When your tax bill lands, is the money already sitting there? Or is it going to be that last ditch scramble, that dirty dance, checking the back of your couches to scrounge for enough loose change to meet your tax obligations, right? If it's a scramble, that's not a tax problem. That's an order problem. The shop that's free, the auto repair shop that is financially free, they've already deducted, allocated money aside for that tax bill. And they did it the day that the money came in for their jobs, right? And 3, this is the final question. It's the one that stops a lot of owners, right? They think to themselves, or they tell themselves, oh my God, well, having more accounts just means they're going to pay more fees. Right? And in most cases, auto repair shop owners are running 2, maybe 3 accounts, right? So they think, well, more accounts means I'm going to pay more in bank fees. But ask yourself this for a moment, right? What is it actually worth to know at any moment that the money for your tax, for your pay, for your bills is already separated and it's already safe, right? You've got the money allocated to your pay, to your tax, to your operating expenses, ready to go, right? That's not a fees question. That's a sleep question. A few dollars in fees against a full night's sleep, knowing you've got the money you need, where you need it and when you need it, like that is the easiest trade you will ever make. And this is exactly what we build for every new engine room member. We assess where the money's going, then we build the rollout plan that gets their shop to benchmark levels for profitability, for owner's pay, for tax allocation, and for operating expenses. And we base it all off of real revenue, which is the money they've got left to use. That's the difference between knowing about profit first and actually being paid first. So here's the shift. If you pay yourself last, then the business keeps everything. But pay yourself first, and the business learns to run off the rest. Leftover, if you're feeding yourself leftovers, that's an accident. But if you're taking profit, that's a decision. And you don't need to make more money first. You need to keep some before you spend the rest. Now, if this episode has you thinking differently about your business and you want to see how we help auto repair shop owners pay themselves first instead of paying themselves last and living off the scraps and the leftovers, then you can learn more by clicking the links in the description below. There's no pressure. There's no sales calls. It's just clear information to help you know to help you decide really if now is the right time and we might be the right fit to help you with your auto repair business. And I'll see you on the next episode of the A Grade Auto Repair Shop Show.